Hello again. Well, welcome back to this last leg of the Climate Innovation Virtual Forum at the beginning of London Climate Action Week, all of it being done virtually. And we were joined by Nick Mabey, the founder of the week, and talking about how important this is. So you're dropping really into a series of discussions which are right on the cutting edge of issues which are concerning, not least concerning because the speed at which things are changing and the challenges which are building even faster than most had feared. So what we want to do now is look at finance and investment for a sustainable recovery. Very easy to write as the headline title for a session like this, but much is changing very quickly. And when we think back to London Climate Action Week exactly a year ago, and the pressure there for green investment and so on, there was a real momentum building. How far has that momentum got? We were expecting to be joined by Emma Howard-Boyd, who's the chair of the UK Environment Agency. She couldn't join us, and so she joined us on an earlier session, the first session this morning. She apologized, but she had a meeting which she was called to. But we do have two other important contributors to understanding where we've moved to on finance and investment for a sustainable recovery. And please keep your questions coming in for the next 30 minutes, because you probably have better questions than I can put. First of all, Catherine Howarth, who is Chief Executive of Share Action since 2008. The Share Action coordinates civil society to promote responsible investment across Europe, with a focus on mobilizing major investors to drive accelerated action by listed companies on climate change. We'll hear more from Catherine in just one moment. And Simon Howard as well joins us, who is the Chief Executive of UK CIF, which is pushing in this very much in the same direction. Both of you, I'd like to ask you one quick question. And if you could just give me a quick answer, which is like a headline answer for the moment. How much is changing? How optimistic are you that actually there are profound changes at work in a way which perhaps even a year ago you weren't expecting on stranded assets, and where people are not putting money and investors are no longer putting money, particularly in the fossil fuel based industries and the energy producers? First, Catherine.
We're in a good place on that. And I have to say, it's been about a long-term build-up of commitment in the finance sector to take these issues seriously. So we're in the best place we've ever been, but it's been a long time coming. And I think the current crisis and the need for a sustainable recovery is a massive test of how serious the finance sector is on this agenda, and a huge opportunity to ensure we don't lock in a high carbon growth path and a recovery that's high carbon, but instead we use this moment to accelerate transition to a low carbon economy.
I'll ask you for your argued thoughts in a moment, but Simon as well, your just headline view of how much has changed and the speed at which it's changing and what is no longer being invested in.
Well, it's changing very rapidly. I agree with Catherine. That change is being driven by a recognition of the science and the potential financial impact on asset values of climate change. That's now been recognised by government and regulators as well. So change coming across the piece. We are beginning to see, I think, a recognition that certain assets will no longer be investable. The investee companies themselves in fossil fuel are beginning to make commitments on carbon, for instance. And I think stranding is underway. So yes, now is the time. As Catherine says, it's after a lot of hard work, but now is the time.
Well, Catherine, you've been at it for 12 years. Give us your more considered assessment, therefore, of where we are on investment. And let me just ask any of you watching, do please file your questions as well. You know how to do that. We've been doing it pretty well for the last 6 hours. So let's hear your thoughts, which I can put to Catherine and Simon. Catherine.
So I'd say that there's been a movement for sustainable investing building, as I said, for well over a decade, for much longer. But it's been really accelerated by a number of regulatory and legislative developments. Critically, at EU level, the European Commission has had a very ambitious sustainable finance action plan. And this is requiring investors to consider the financial risks of climate change, amongst other things, in the way they make decisions, and to disclose and be accountable about that. And here in the UK, we've had also some very important moves from the Financial Conduct Authority, from the Department of Work and Pensions, building this into pension fund regulation. So that's really critical. And then there's been a whole massive growth around the methodologies that enable this to be done properly. There's, I would say, a long way to go still on that, but there are tools emerging that, whether you're a bank or you're a large pension fund or an asset manager, you can use to ensure that you are bit by bit decarbonising your portfolio. You are allocating into green investments. You're being accountable about that. Another enormous important part of the architecture is the Task Force on Climate-Related Financial Disclosure, which was kicked off by Mark Carney when he was still the Bank of England governor, and is a kind of business-led initiative. But so that's the sort of optimistic position. Now, the reality is that there's an awful lot of greenwash in the space, and an awful lot of institutions in the financial sector, whether it's banks or others, that are talking the talk. And actually, there's a big gap to close between rhetoric and reality around some of this for some institutions. So I'm not it's not a totally rosy picture here. It's very important to temper that with saying that there's a real need for the finance sector to be held accountable by the public, by people whose assets they manage, including ordinary pension savers, being able to see what's in their pension fund and so on, but also by the public regulators and the public policy makers, because we will not achieve the Paris climate goals without mobilizing finance. Finance has an utterly critical role to play, and it's important that we set finance on a path. We celebrate leadership in the finance sector, but we also keep a very close eye on the sector.
Thanks for the moment. Well, Simon, what's your view? Because your starting point really is that there is a willingness to invest now.
Yes.
But there are still barriers, and we heard from Nicholas Beattie, who was talking to us earlier, that there are real problems. He was trying to get finance for all his batteries in buses, and he had to go to the private sector rather than banks, because banks didn't want to lend him anything.
Yes. So I agree with everything Catherine said. You can see the change and the trend coming. To my mind, the new player in the last 18 months or so has been the public. And we've been doing opinion polling for over a decade now for Good Money Week each autumn. And in the last 2 years, the public, in the polling, they say they are far more committed to responsible investment than ever before. And I think this is Greta Thunberg and David Attenborough, and it's the weather changes we've seen in the UK in the last 2 years. So the public get it, they're the new player. What needs to change and what are the barriers? Well, they are regulatory. And in particular, if we're thinking about the recovery from COVID and blending that with climate work, how are we going to fund the home retrofits and the repurposing of the landscape? I think we want the public to play a role in that, in their auto-enrolled pensions and in their savings. And we need the FCA to approach the emergence of new products doing new things in a new, far more permissive way. We need the FCA to act in a way which welcomes innovation rather than clamps down on it. So, yes, the regulators have improved in the last few years, but we need that mindset to go more if we're to get a just transition as we recover from COVID.
Simon, you say, and both of you, if I can, both Simon and Catherine, you say that the public are the new players, but the trouble is they don't lend money for risky investments, or what is seen as risky investments. They don't have the cash. It's the banks. There is the Green Investment Fund and everything else. But what we're seeing, and I'm generalizing here enormously, is still that reluctance, what you called, I think, Catherine, greenwashing, that they're talking about it. And Paul Polman, on a webinar I was doing last week with a lot of business leaders, he was saying this is a very dangerous moment because many companies are trying to give the impression of doing something when they're not. Simon first, the public players.
Yes. I think banks are improving. We've recently seen what I think is an excellent commitment from the Royal Bank of Scotland, NatWest, to halve the emissions they finance by 2030. So I think the big banks are getting it and are beginning to change, but these are very large organizations. In the regulatory space, the banks are talking about whether they should be charged a higher capital fee for bad lending, the Brown penalising factor, and whether lending to good things should be subsidised in the capital regime, the green supporting factor. And my understanding from my members is this kind of thinking is gaining ground, and I hope the big banks will evolve rapidly. There's a great opportunity, Catherine's alluded to this, there's a great opportunity for finance to do good now in the transition. It needs to be done in a just and social way, but the opportunity is there for banks to be seen to be doing good, and I think the willingness is increasing to do good there.
And Catherine, given what you've been campaigning for the last 12 years, do you think the public is having that kind of impact on those who invest, the banks particularly?
Oh, I think there's a very strong awareness of the public appetite for some of this. Some people might have, if you were watching Newsnight last night, you would have seen Richard Curtis launching a new campaign called Make My Money Matter, which is allowing or encouraging the millions and millions of people in the UK with pension savings to be more vocal, to be more involved in steering their pension providers to do the right thing on sustainability, but not just on green issues, also on human rights and jobs issues. And I want to come back to this, what Paul Polman called a dangerous moment, but I'm going to call a moment of opportunity. But also of crisis. And there are huge numbers of companies who are in an incredibly fragile position financially at the moment. Those companies need refinancing, and there'll be some government refinancing, and there's been a very good discussion about the need for conditionality, sustainability conditionality built into government financing coming out of this crisis. But the primary institutions that will refinance companies, the corporate sector, will be banks, pension funds, both in terms of equity holdings and in terms of bond holdings. And this is an incredibly important moment for financial institutions that have put up their hands and said, we're interested in the climate crisis, we're interested in supporting transition. They can hugely put their money where their mouth is, quite literally, by ensuring that the condition for refinancing companies is that companies produce and publish credible low carbon transition plans that align with the Paris Climate Agreement, but also ensure that we have companies thinking about decent jobs and equity within companies and so on. There's a range of issues, but on the climate crisis specifically, this is a moment where the financial industry has additional leverage because so many companies need refinancing, and this will be a really important time to test whether the financial industry is serious or if it is all just greenwash.
Well, I come back to what Nicholas Beattie, the chief executive of Zenobē, said when he was trying to get funding for his batteries. He was talking about buses and so on. I hope I'm quoting him correctly. He was looking, I think, for 20 million UK. And none of the banks or normal financial institutions would support him. So he had to go to private investment, which raises the question for you both. Where is the balance now moving between private investing and family investment and those who have a really strong personal interest and the banks who are still rather cautious? Catherine first.
So I think I'm very pleased with the fact that a wide range of the largest banks in Europe have made quite public commitments to put more money into green industries. So, whether it's Credit Suisse in France or HSBC or BNP Paribas, or a wide range of banks, we've just assessed, we've done a ranking of the banks on this. A lot of them have put quite big numbers up in terms of their commitment to green financing. So now, whether that's filtering through to the individual with his bus company that you just mentioned, I don't know of him, but I don't know. And so, it's very interesting to have that kind of anecdotal perspective from the ground, if you like, in the economy, real businesses with great products and ideas that help transform our economy in a low carbon direction, struggling to get bank finance. That's a concerning story. It doesn't totally surprise me, but I would say there are more commitments coming. I'll leave Simon to discuss the kind of question of kind of private and family finance for those sorts of things.
Simon, that shift, is it taking place and is it almost irreversible now, do you think?
I think it is probably irreversible. What I think the story about £20 million flags is there is a problem in what is a relatively small sum of money, getting capital to flow. And this has annoyed me for some while. It's almost harder to raise £5 million for a local project than £500 million for a regional project. And again, I do point the figures slightly at regulation here. People should be able to invest locally. It should be made much easier for them. Yes, there are risks. People should be made aware of the risks, but then they should be left to get on with it. We are talking risk capital, and people, I think, should be allowed to take some risk with that capital. And there are problems down at the smaller size. But I'd like, if I can, Nick, just to talk very briefly about the national level and refinancing. We don't have the luxury of time. And what I think the government should be saying is something like, we, the government and the big institutions, will refinance companies to keep them afloat now. We will then present the bill in terms of climate and evolution in a year or 2 years' time. But let's keep the companies afloat now, and then we present a post-dated check, as it were. Just thinking aloud, for instance, on Gatwick Airport, I don't think Gatwick Airport should be allowed to shut now because the impact on those jobs there will be far too great. What the government should do is something like keeping it afloat now on the understanding it will shut in 10 years' time, ownership of the site will come to the state, and we then redevelop the greenest business park in Europe or something. This is a time of crisis. The government has lost the COVID war. It needs to win the COVID peace. It needs to act like a government. It needs to keep jobs, but on terms.
We've got a lot of questions coming in now, needless to say. Let me give you this from Neil Pitcairn from the Circularity Foundation. And we've mentioned this several times before, but BP's asset write-down last week, and including Shell a couple of days ago, down 22 billion, and BP 17.5 billion. What sort of shock or confusion is that now causing among pension funds? In other words, is that going to cause some financial institutions to say, whoa, we're in danger of having a liquidity problem here? Simon. Oh, sorry, Catherine.
Okay. So I think for many people, and Shell have provided a probably unhealthy proportion of overall dividends in UK pension schemes for some time to come, considering those are industries that we know need to be phased out on quite an ambitious timetable. The writing's been on the wall for a very long time, and I have to say that a lot of ordinary pension savers have been clamoring for their pension funds to sort of diversify it away. Some have been calling for full divestment, and others have been saying, we've got too much weight in our portfolios in these oil and gas companies that look very vulnerable. And no one will be surprised by those write-downs. They were very, very predictable. There is a real challenge for pension funds, which is, where are they going to find the next generation of reliable dividend-paying assets? And what we actually, I think renewable energy is a very interesting option for that, because the cash flows can be nice and predictable from renewable energy. Not easy to kind of completely replace the role of oil and gas in portfolios with renewables overnight. But that's the transition that pension funds and trustees of pension funds with obligations to think about long-term risk have to be getting their heads around. And it's very good that the government has now required it of pension funds. So I think we are making steps in the right direction. The problem is the journey is going to be quite bumpy, quite unpleasant, and that's very unnerving for people at a time when people are already feeling quite financially insecure, to see these quite big gyrations in the value of their pension assets.
Simon, your view as well, given that Ben van Beurden of Shell and Bernard Looney, the new chief executive of BP, have made clear that they're in the business now of a completely different kind of energy company.
Yes, this has all been entirely predictable, as Catherine has said, and certainly the large investors will not have been surprised by what's going on. In terms of replacing the income, well, things like bond structures linked to repurposing landscape, linked to building electrical vehicle charging points, these are ideal for the long-term institutions. Now, what the city needs to do is start working out how it can give access, how those schemes can be funded by the pension schemes and the life insurers who need long-term predictable income. The government needs to hold the ring to make sure this can happen quickly. We need the planning regulations, we need the technical specifications, we all need it very, very quickly. Again, the need is for urgency. The government has been slow hitherto. Did the furlough scheme? Yes, good top marks. But I'm not seeing in our conversations with Whitehall, I'm really not seeing as much speed as is needed for the recovery.
Are you therefore, both of you, expressing, I don't want to put words in your mouth, Catherine, the kind of things we've heard from many speakers today, rather ones of disappointment after what the British Prime Minister said yesterday, Boris, in Dudley, when he said essentially build, and we're going to relax planning, and essentially giving a sense of not least because the money is the same money that's been around for a long time, that really not anything as profoundly changing as he was signalling was really going to happen. Catherine, your view?
No, well, I'm afraid I just agree. It was such a great moment for something quite visionary from the PM, and interesting to see what's been happening in France with some very bold propositions coming out from the French president as a result of a process in France which saw a citizens' assembly, 150 randomly chosen people from within France who had no expertise, but then were informed by experts and helped to come up with a very bold set of propositions on the transition in France. And we're getting a kind of much more top down and actually very sort of weak response so far from the UK. But it's early days in this transition, and I think there are clearly opportunities to pull together experts in finance, in the corporate community, in civil society, to help government get a package right that not only accelerates our recovery, economically speaking, but gets us on the right path, that we don't see the next kind of catastrophic financial crash being triggered by a climate catastrophe.
But Simon, can I put, not wanting to put words in your mouth, but there's a sense of dithering and lack of commitment. We heard it from John Armitt as well. I've quoted him twice already, but he kept saying from the Infrastructure Commission that the government has got to make up its mind. Business requires clarity, regulatory clarity, and you've always been moving significantly on the issue of regulation here.
Yeah. I think the government's just moving too slowly. They're using conventional methods and the established processes in the middle of a crisis, and they do need to be quicker. I would slightly disagree with what your interpretation of what Boris said yesterday. If he is going to free up planning in the towns, and we can look to address any housing deficit quickly and on brownfield sites, that is quite encouraging. What we need is similarly ambitious plans in other sectors of the economy, and that does seem to be lacking. It doesn't seem to be joined up thinking in Whitehall. Prime Minister chairs a climate committee. I'm still not sure it's actually met. He should be banging the table and demanding action this day. Churchill is one of his heroes. He's the Prime Minister, for heaven's sake. Act like it.
Let me pick up, Catherine. We've already had a comment of what you're saying about citizens' assemblies from Amanda Lake. Will the PM listen to the citizens' assembly, which is very supportive of all we've been discussing today? I suspect I know your answer, Simon, but quickly, Catherine, on that one.
Well, I very much hope so. I think there's a real opportunity for Boris, having won a very decisive election victory, to now, show that he's a listening prime minister, but also a bold prime minister. So I remain hopeful that we'll get the right policies out of number 10 and the right kind of pace of response, as Simon has said. But I think the jury is out.
Simon, you have focused significantly on regulation and trying to get that change. Given the speed at which the public is expecting change, can regulation be changed at that kind of speed as well, particularly if you've got a government which has an 80-seat majority in this country?
Well, yes, the government is the government. It makes the law. We're not constrained to do what the EU wants. The Prime Minister's the Prime Minister. He can tell the FCA what to do. He can change their remit. He can change the remit of the PRA and the Bank of England. So, now is the time. And for the first time in 40 years, the Prime Minister's arguably got the tools and discretion to do it.
Now, Fatih Birol from the International Energy Agency, when he was talking to us 5 hours ago, said very clearly there are quick things that can be done. First of all, to stimulate the economy by up to 1.1% increase in GDP every year, which includes creating jobs and retrofitting. He kept saying that, particularly on windows and roof spaces and so on. And I sort of made a comment, there are a limited number of people who can do that, even if they're out of work. But Martha Bolcom, an architect from Fylde & Clegg Bradley Studios, has asked the question, how do you propose that the urgently needed retrofit of our existing building stock can be financed, given the pressure that's on from the IEA, which say it can be done, needs to be done, but that's still got to be funded? Catherine.
Well, I mean, this is where the UK's pension fund industry, we have an enormous pension fund industry relative to many countries around the world. Pension funds cannot commit assets and capital to projects that don't make sense from a kind of financial point of view. But the government could put in place the policy regime that makes it very profitable and not like excessively profitable, but financially sustainable for our pension funds to release capital into the kinds of schemes that your questioner has highlighted. Retrofits are really a big win-win, very jobs rich, which is absolutely great at a moment like this when there's huge unemployment on the horizon and rising fast already. But it needs to be made, and government policy can do this, sort of financially realistic for pension funds, but the capital is absolutely there. In fact, thanks to automatic enrolment, there are millions of people who month after month putting new money into pension funds that are looking for investments that don't look like BP and Shell anymore, which no longer look like the kind of safe bet they did in the past. So this stuff's perfect, and we just need to kind of coordinate the actors and drive the change, and government does need to lead the charge. But if it does, there's plenty of private capital in the pension fund industry and in other places privately to draw upon.
All right, I'd like to give you both a challenge. I'm giving you 15 seconds alert of that in the last 3 or 4 minutes of the big thing that really the government has to do, particularly in the United Kingdom, to show a real commitment, which will indicate that by November of next year, there's an absolute determination to move in the right direction, quite apart from Brexit and everything else and the pandemic. And I'd like to ask you what if you like your shopping list or where the axe needs to fall on obstacles to moving in that direction. But let me just, while you're thinking about that, give you this comment from Gillian Gibson, an environmental consultant. I hold a very green pension portfolio. However, trying to take my pension advisor on the journey with me has been difficult. And she asked, how do we retrain pension advisors to be better aware of how to invest responsibly? Well, in our work at Thinking the Unthinkable, we call this the cost of conformity. But let me ask you in the last 2 minutes, a minute each if you can. Simon, first of all, what are the big things which have really got to be literally demolished, or at least set aside or vaporized, in order to send a very clear signal when it comes to investment and the good use of money in the next, let's say 12 months?
I think the Prime Minister needs to lead, the government needs to lead. He could do things like saying Gatwick will be shutting in 10 years. That's the price of keeping it afloat now. He could be pulling fossil fuel subsidies as part of the net zero commitment, the legally binding net zero commitment. The government can start funding the retrofit, but can be banging on the doors of the big pension funds and the big fund managers saying, you're going to have to take this over. How do we structure it such that it's attractive to you? Catherine's quite right. There's growth capital opportunities. There's annuity income from that kind of work. It's attractive to a wide variety of investors. Government's just got to drive it forward. It's all doable. We are good at finance. We're good at thinking. We're good at industry. It's all doable. Just somebody needs to put a bomb under Boris at this stage.
Okay, that's the headline, a bomb under Boris, but we're not going to get the counter-terrorists to come in. But let me just pick up very quickly.
It was a metaphor, my lord.
Okay, well, I'll say bomb under Boris. But when you, for example, when you look at the auto industry, 97% of cars being produced are not being sold at the moment. What do they do about the auto industry in the Midlands, in Oxford, and so on and up on, although in Sunderland things look pretty good for Nissan at the moment. Quickly, what should they be doing about the auto industry, which is central to employment in so many areas of Britain? We've seen what's happened to Airbus today, the announcement of the loss of 1,700 jobs. But the airline business too, are those things which simply have to be written off now as part of this green recovery? Quickly, and then Catherine, you can pick up as well.
I don't think you write them off. I think you need to keep the people working, but they need to transition incredibly quickly to electric vehicles. The aerospace jobs, I fear they may have to go. There is no green airplane yet. We should keep the jobs going for as long as we can, but we need to recognize they're going. Someone's going to lose capital, tough. But, you know, the transition has to happen. COVID has to be an accelerator of the right kind of transition.
All right. Let's make clear, if I may, Simon, we're not talking about putting a bomb under Boris. Is that right? We're not in any way inciting. We're not inciting anyone to do anything, and that was just a bit of loose talk. All right, Catherine, thank you. I think we had to just put that in, if you don't mind.
That's quite all right.
Catherine, your final thought, please.
So, well, first of all, I just wanted to congratulate Gillian on being an advocate of green pensions and pushing her financial advisors to get their heads around it. Not untypical story. I think the pension fund advisory sector and independent financial advisors have a massive catch-up game to play on this. So, but clients can help to make it happen. Now, what the government should do, it's quite clear that the government can build climate considerations into absolutely every aspect of the recovery programme. So whether it's, the Bank of England's bond buying programme should only be from corporates that are whose activities are consistent with a zero carbon by 2050 world. All new financing from government for companies needs to be conditional on these rapid transition plans that must be published, and where shareholders then should get a vote each year on year on whether a company is delivering on that sustainability plan. And then the government can also, Treasury can bring together the biggest investors in the country, whether it's the pension funds or the asset managers, and just pull heads together and say, you will all be on the front line of refinancing the corporate sector in the years ahead. We need your help with that. But please, where you've said that you're a responsible, sustainable investor, make that real, make that count in the refinancing that you undertake of Britain's corporate community in the year ahead, because the finance sector can make all the difference in the coming 12 months in terms of the path that we now move on to, both the pace of recovery, but also the direction of recovery. We need government and finance working hand in hand on that. And I see every prospect that could happen. It needs Rishi Sunak bringing together the big bosses in the city, in the finance sector, and really saying, you need support from us. We've given you support, including 10 years ago, bailing out that industry. Now's your time to pay back and really enable us to deliver low carbon recovery.
And it can be done profitably. You know, that they can construct things such that these are good investments. It can clearly be done.
Thank you very much, Simon Howard, Chief Executive of UK CIF, and Catherine Howarth, CEO of Share Action. I was with Lord Jerry Grimston, it was on the record when he said this, who obviously worked in banks before he became Minister for Investment about 2.5 months ago. And he made clear that after his time in government previously, he was amazed that 5 years of work has happened in 5 months, indicating the speed at which change is underway. And he was relatively optimistic, having been at Aberdeen Standard and also Barclays Investment. So I hope that it's not a year from now, but we can review this in a few weeks and few months, because actually I do sense that there is a significant momentum. And let me leave you, as we're coming to the end of this virtual forum, with what Fatih Birol, the head of the IEA, the International Energy Agency, said. There is, though, a serious possibility of a rebound on all these energy issues. In other words, much of what has changed could easily rebound very quickly, unless there is significant change at very high speed. And I think that has to be a sobering message. So once again, Simon and Catherine, thank you very much indeed for joining us. And thank you to everyone else who spent time during the day. I hope you enjoyed your 2 hours away. We didn't hear who was talking to who as a result of meeting them each other on the virtual forum. It's been brought to you by Climate Action. And can I thank my colleagues, Yolanda and Reese and Nick and Camilla and others here at Climate Action for what they've managed to get together. It's never easy, even during a pandemic, to get people to commit. They're so overworked in their attics and studies that this is almost a relief to get away and speak to somebody else. But thank you all very much indeed for sparing time. And this is part of a process of bringing together under the pre-COP26 process, which is now another 15 months to run, to try and stimulate contacts, building a community, building a process. Thank you as well to the funders, the partners led by EDF and Zenobe. There you can see all the other partners who've supported this. So thank you all very much indeed for being with us, for watching and for taking part. And look out on climateaction.org for the next iteration of this. It's moving all so fast. Thanks for joining us, and from me, Nick Gowing. Bye-bye.